Welcome to another week here at Equity Mates on AusBiz. My name is Bryce, and as always, I'm joined by my equity buddy Ren. How are you going?
I'm very good, Bryce. Great to be back for another week.
Yep.
And we're bringing back the long form interview.
Yes, long form is where it's at the moment, and and we're bringing it back to AusBiz. We've had such fun with Michael Frazis a couple of weeks ago, and a number of other guests in the past. So we've got lucky enough to have another fund manager joining us for the next 4 days to talk all things large caps and the Australian market, ESG. So plenty to chat about. It is our absolute pleasure to welcome Julia Weng from Paradise Investment Management. Welcome, Julia.
Thank you very much.
So Julia is the Australian large cap portfolio manager at Paradise Investment Management, has 13 years experience in financial services and holds a Bachelor of Commerce Actuarial Studies from Macquarie and is a CFR charter holder as well. So today, Julia, we're going to start at the top and unpack current market conditions and also your investment process over at Paradise. So let's start with that. For those who haven't come across Paradise before or what you do, what's the lens that you take and what's the investment strategy?
Yeah, thanks. Paradise, at a quick snapshot, Paradise was founded in 1999 by David Paradise. Probably needs no introduction. So the team across Paradise manages about 18 billion of domestic and global equities, and we've got offices in Australia and US. The fund I'm a part of, the Aussie Broad Equities Fund, there's 5 of us, and we try to pick 30 to 50 stocks that can outperform over a 3 to 5 year horizon. So majority of the portfolio is in large caps, but we invest throughout the market, giving us flexibility for when options and good opportunities arise. So there's 5 of us, and we're a pretty closely knit team. And the COVID has made working be more innovative, to be collaborative. So we had a virtual escape room adventure earlier today, just to have a bit of a difference to the day. But in terms of our investments, it's there's no set formula. You know,
So,
invest in an art.
so Julia, in terms of that, large cap space, would you have like a particular investment philosophy? Are you looking for value, or are you looking for large caps that can continue to grow into the future? How do you think, how do you, I guess, scour through the investing universe, and what are you looking for?
Yeah. Look, there's no set style. It's not a value or growth fund. Valuation is value. What is value is relative. Do you buy a harborside mansion in a prestigious suburb? Is that value? Or do you buy a shabby shed but has renovation potential? Or maybe the suburb is, gentrifying. So it is very, it's relative, and it really depends. So in a portfolio, we look for a combination of structural drivers, stock that you're happy to own year in, year out, have a competitive moat around them at a decent price, as well as, stocks that are have more of a turnaround. So, they're good quality stocks, but they've gone through a rough patch. Maybe it's COVID impacted, and it's being, there's a lot of emotion in the market and it's being oversold. So we try to capitalize on inefficiencies and emotion and panic in the market to find good investments. But yeah, it really depends on. We probably have a combination of the structural growth and the value turnaround kind of stocks.
And so you mentioned there you have 30 to 50 stocks thereabout in the portfolio, and you're trying to outperform the market over sort of 3 to 5 years. Mind you, the market is absolutely pumping at the moment. So I imagine that would be quite a challenge to find large cap stocks that are really outperforming. What are some of the industries at the moment that are really sort of exciting you in this space?
Yeah, I mean, as you said, the market is quite toppy. It's had an excellent run and potentially pulling forward returns from future years. And so what we're focusing on is, companies with earnings upside and also valuation support because the macro, can't be really controlled. So a particular space that we particularly like is the battery materials. So by that, we like the names like Pilbara Minerals, Orocobre, or Linus. I mean, these names are supported by long-term structural demand, and these some of these we're blessed to have lithium, really large lithium producers in Australia with very low cost globally, and it's a thing that's still in the early days. I mean, from what we've seen in the last, 6 months, demand continues to surprise on the upside. Initially the EV, the electric vehicle story was just China, but over the last 6 to 9 months, we've seen so much regulatory support from the like of Europe and US. US, for example, last month committed to having 50% of new vehicle sales being electric vehicles by 2030 and also expanded tax credit for US-made electric vehicles to 12,500 per vehicle. I mean, that's a lot of money. So demand, continues to surprise us on the upside in terms of adoption of electric vehicles, and it's not just a consumer preference anymore. You've got assistance from regulatory support, and you've got improvements in battery technology, which reduces the cost of buying these electric vehicles. And at the same time, supply is struggling to keep up. You can't just turn on a mine quickly. So, we see the lithium market being in deficit for the next few years. And that bodes well for the names we talked about, where we think demand for lithium could be 10 times what it is today in 2030. And Linus plays into that as well. So Linus is the only scaled player of rare earth outside China. So rare earth goes into magnets and all things electrification. And in this climate where security of supply chain is extremely important, um, Linus plays is a very strategically valuable name. And so again, over the course of the next few years, we see that being the earnings. Um, there's a lot of upside to come, and there's a lot of the price for these commodities, for these commodities, needs to go a lot higher to incentivize new production. So that's a space we like. Um, Financials. Also broadly, we like financials, but banks probably have had the prime time over the last 6 months. But Macquarie is a name that we like. I mean, we know it's benefiting from very strong capital markets and dislocation in commodity markets. But I think what the market may be undervaluing is that Macquarie is a pioneer and a leader in renewable infrastructure, and something like 50 to 100 trillion dollars needs to be spent over the next 20 years on upgrading an existing transmission line to capable of transporting hydrogen, for example, and we'll continue adoption of solar and wind energy and so forth. So Macquarie's early onto that trend, and it continues to be a thought leader in that space. So that's one with genuine earnings growth potential. But yeah, we're generally looking for companies with genuine earnings growth, irrespective of macro markets, and have good valuation support.
So, Julia, some names there that definitely, I guess, have got a lot of traction in the equity mates community. Linus is spoken about a lot. Bryce is a particularly big fan of Macquarie. But I think, if we're talking about themes that are really discussed quite heavily, lithium is right up there. It's a hot topic at the moment for a lot of the reasons that you described. I'd love to go into your research and thesis forming process a little bit more. We often hear about forming a thesis and the importance of having a thesis and testing a thesis. And it'd be great to get a little bit specific in that lithium example. You know, you mentioned a few different company names, and you talked about some of the big macro trends that are pushing the industry forward, government support, the electrification of vehicles. When you have like a big, you know, a macro theme like that, and then you say, all right, well, now I need to find the right companies in the industry that are going to win and that are going to be good investments. What's your process like there, and how do you go about forming a thesis?
Yeah, sure. So you know, we try to marry the micro with the macro. So, you know, as I said, you know, investing is an imperfect science, but we do have some guardrails that help us shape our research process. So, you know, to point out a couple, we do a lot of extensive industry analysis, whether it's talking to competitors, to suppliers, to customers. You know, sometimes you feel like a, you know, forensic detective just triangulating all this information and to see if things are consistent or not. We pay a lot of attention to competitive positioning. So, you know, how, you know, what makes this company unique or the industry have sustainable growth over the next few years? You know, is it increasing its moat? You know, so for example, you know, everyone knows Amazon. You know, Amazon going from e-commerce to logistics, improve its competitive moat. Whereas, you know, a Nokia or a Kodak that's not reinvested in its growth, you know, is more of a sunset industry, even if it might be having great financials at that time. So something that we do a lot of work on. Quality of management is obviously very important, and it's a hard one to distill into numbers. But you know, you look at their capital allocation and also consistency. You know, they have a strategy, but are they executing to it, or has it changed over time, and why? At the end of the day, you know, we're investing in people. You know, we're numbers are just, you know, a set of output and financials as a result of, you know, people and how they execute on strategy. So, you know, we spend a lot of time discussing management, and if there is, you know, red flags like higher turnover, and of course, financials matter. So, you know, we don't invest in hot themes or story stocks. So, you if it has no capacity to make money or to generate returns, that's something that we're very mindful of. You know, I think you know, at the start of my career, someone, you know, very smart, said to me, you know, it's very different investing in a company versus a stock. You might like a lot about the company or the industry, but if you pay too much for it, that doesn't, you know, make a great investment, and you know, it's a sure way to destruct capital. So valuation is something that we pay a lot of attention to. You know, there's no set valuation methodology. It depends. It could be a DCF. It could be an IRR for a longer, you know, longer tailed infrastructure stock. It could be multiples. Um, yeah, look, it really depends. But you know, perhaps to illustrate an example of that, you know, uh, Goodman Group is a good example. It's a leading developer of industrial real estate around the world, and it's another sort of structural growth story. Um, but you know, in reaching our investment conclusion, you know, we spoke to leading warehouse developers around the world, like Prologis in the US, Segro in Europe, and ESI in Asia. You know, we talk to some of its customers like Amazon and go, you know, why do you go with Goodman? What's so good about it? You know, what are your, you know, what is the outlook for e-commerce? We try to triangulate a lot of these things to work out, you know, what is a reasonable price to pay. So yeah, it's a reiterative process, and there's a lot of discussions within the team. Um, and yeah, so it helps to have, you know, a different pair of eyes on it sometimes as well. So, you know, we may also swap around the stock coverage time to time. just to have that independent or fresh pair of eyes on a stock or different way of looking at it.
Nice, Julie. Well, unfortunately, we have run out of time for today, but the great news is we have plenty more opportunity to pick your brains on all things large cap. And you mentioned ESG there, and we are going to be picking up that conversation tomorrow in a bit more detail, as we know it's something that you're certainly quite passionate about. So thank you for your time today, and we'll look forward to seeing you tomorrow to talk things all ESG.
Thanks.
And that brings us to the end of another episode of Equity Mates on AusBiz. As we said, we've got Julia back in the studio tomorrow, Ren.
All right. Well, Bryce will have a coffee and he'll lift. Look, honestly, this is par for the course for us at this point. So join us same time, same place tomorrow, and we'll pick up the conversation with Julia then.